Back in 2017, I was glued to my screen as Bitcoin hit $20,000 for the first time. There was a media hype, the FOMO, everyone was screaming, this is your chance. But then the crash came. Fast forward to 2021, it was deja vu. This time, Bitcoin peaked at $69,000, fun number, I know. And here we are again, pushing new all-time highs. So the question is, how do you trade in this environment without getting burned? Today, I'll walk you through the strategies to navigate Bitcoin's all-time highs, when to jump in, when to stay cautious, and how to avoid emotional mistakes. Let's dive in. But before we get into the charts, let's talk about something just as critical as protecting your capital, protecting your personal data. This year alone, we've seen some of the largest data breaches in history. Dell exposed 3.9 million customer records. United Health leaked the sensitive information of 100 million users. Ticketmaster compromised over 560 million customer accounts. And the most alarming breach, national public data was hacked, exposing 2.9 billion records used for background checks, including full names, addresses, birth dates, phone numbers, and even social security numbers. Yes, that includes nearly every American. What's worse, some of this data is now freely available online. That's why I use Aura, today's sponsor. Aura is a comprehensive personal security tool that monitors billions of data points across the dark web and public records to alert you if your information has been compromised. And if the worst happens, Aura offers up to $5 million in identity theft insurance. What do they provide? Right across the board, real-time alerts for data breaches, a secure VPN for private browsing. Totally love that. Data broker opt-out services to keep your information off marketing list, and a password manager to simplify and secure your login details. Don't leave yourself vulnerable to hackers. Try Aura with a 14-day free trial and find out if your data has already been exposed. Head to the link on the screen. It's also down in the description below. Now let's jump back into the charts. So we know how critical it is to protect your personal data, but now it's time to protect your portfolio. Let's hop into the charts, break down the current Bitcoin price action, and talk strategy. Whether you're day trading, swing trading, or just holding, there's something for everyone here. All right, so now we're looking at Bitcoin. Of course, we're gonna start on the daily, okay? We are volume traders, okay? So you'll actually notice that the ticker first and foremost is MBT, Micro Bitcoin Futures, right? So this is a futures product. I'm a futures trader, so you shouldn't be surprised that I'm trading futures as a futures trader. What do we have here at all-time highs on Bitcoin futures? Okay, we have a node that developed here, right, on the visible range volume profile. So if you're trying to figure out which indicator this is, since you guys ask me in every single video, this is the VRVP, visible range volume profile. I've changed the colors and the up and down volume, get rid of that, not really necessary. And we'll get rid of some of these old lines that we don't need. We've already broken through that. Some previous trades there. So we have consolidation at the highs, very similar actually kind of to what ES and NQ were doing just a few days ago, but you can see that we're still kind of ranging inside of the highs here, right? So let's actually just zoom into these previous candles and let's talk about the behavior here. So we have within this range at the highs, we'll just do that and we'll do that, right? So that was a low, right? Doji candle form, we had another doji, right? Kind of different characteristic doji, very high volume here. We can see here on Wednesday, November 13th. And then we had 2 more days inside of that. Okay, if you remember, Friday was a trend down day. This ranged up on Bitcoin. They're obviously different markets, so we shouldn't be surprised that they're behaving differently. But I do want to call that out that we did have a down day in the indices while Bitcoin went up. Now, a lot of you guys are going to try and tell me a bunch of stuff about Bitcoin that I don't care about, right? Like the fact that you think it's going to 200K or a million or blah, 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 blah. If I'm going to trade Bitcoin and not just invest in it, okay, I have a crypto portfolio. It's doing pretty well, right? I'm as excited as the rest of you guys are on my long-term crypto portfolio. I'm not talking about the long term, and I need you to keep that in mind. Okay, we're either trading or we're investing. If you want to talk about investing, go check out my channel called The Macro Show with Forrest. I have a series where I invest $250 every week into the market. That portfolio just cracked $8,000. I started it here on this channel at zero. We're not doing that. We're trading. Trading is an income generating activity. We're trying to generate income. Okay, that means that I'm getting into the market with the explicit purpose of getting out to lock in some profits, lock in, some capital gains taxes, and then whatever I do with that profit, I might invest that profit later. I just want to call that out because trading and investing are not the same thing. So we're in trader mode right now. We have a node being built at the highs. We're chopping up here. If this is going to rip higher, Bitcoin is in price discovery, we're going to want to see some more volume come into the market. We want to see buy aggressors pushing this beyond this 94,140. 92K was a perfect measured move. I called out in the Discord, actually. You can join our Discord. You can check it out in there. It's in the chat log. I called a measured move, really this wave here, right at 92K. And then right once it got to 92K, well, 94,140, you know, pretty close, we started to chop, right? Not surprising at all. So what should we do as traders in this market? Well, I'm going to read this like I would any other market. So first and foremost, we had a ton of volume come in right at this measured move, and we had another top-wick form. Yes, these are dojis, but we need to see if this is going to actually crack this high. Otherwise, this is early signs of weakness in the market, right? This looks like a flag, but this is also all-time highs, right? So flagging at all-time highs is pretty common right before a rollover, right? We can see some previous other consolidation, which was really all a flag is, it's just consolidation, right? We saw some consolidation at what was then all-time highs, and then what happened? It came down, right? So we had a red candle here. This was a Thursday, red followed down. It broke the lows of, you know, what would have been considered that flag at that time, and then started ranging. This is a pretty good example of what's possible as well, right? It could crack and just range. Doesn't necessarily mean it's going to completely roll, okay? To get an idea of what it would look like if it rolled, we should probably look at the last time it rolled, okay? So what is this data point? This is November 10th, 2021, right? And then after that event, or after that day in November, it came down $36,000. So you can see here, what is the characteristics of the market at this time, right? We had this doji here that extended a little bit higher, and then really a strong candle that engulfed the previous day. So if we want some early signs that this is truly exhausted, there's a few things that I want to look for. I want to see volume in a candle that engulfs this shape one way or the other. It doesn't really matter for me right now, right? So I want to see a down candle that engulfs this with volume, or I want to see an up candle that engulfs this with volume, right? This high and this low. It's very, very simple binary analysis. I keep trading really simple, guys. You know, whether I'm trading futures, if you're trading leverage with options, right? The TA is really the same. Is the market is seeking liquidity. The primary liquidity zones right now is this node that we're bouncing in. We have a low value gap down here. Let's actually use our rectangle tool if I can find it, right? We have this low value gap down here, right? We should expect it to rip through here, right? If it cracks this floor, it's going to rip down to 77,520. A lot of you guys might not like that because you're Bitcoin absolutists. Most of the people who think like that are also broke. So if it rips down through here, the next support is going to be where there are peak market participants, right? That's where the volume profile is so important. We can also see that it just so happens where market participation is also where there's structure. Okay, so we would probably dip into this little bit, 77,610. That's about a $22,000 bleed off, right, from the current price. But again, in order to get confirmation of that move, you probably want it to come down into this low value area. And so the expected value on that trade is like 7,500. For anybody who hasn't traded MBT before, 10 contracts is essentially the magic number. If you trade 10 MBT, that gives you a 1-for-1 move. So you would essentially make $7,000 on that move. If you play leverage in whatever way, you can make a little bit more than that, or lose money if you bet the wrong direction. But yeah, that's really it in terms of the macro on Bitcoin. I'm watching this. I did play a long and then a short initially. So I played the first impulse long, then I played, as soon as it lost steam, I played a short here. Then I'm hands off. I did try another, I can't even remember what my third trade was. It was incorrect, though. I think I maybe shorted again, got stopped out. So lost a little on the end there. So went 2 for 3, not bad. I'll have to look at my trade log. I honestly can't remember. I was doing a lot at the time. But my plan right now is to wait. So I want to see it crack these key levels. And really, I'm looking around this node on the volume profile. We can investigate a little bit closer, go to the 4-hour really quickly, get a better idea of what is happening here. We can see this shape kind of forming. It looks a little head and shouldery, but this shoulder pretty high up, pretty strong shoulder. Overall trend though is obviously up right now, so we do want to account for that, even though it is consolidating. We have lows here. Let's get rid of the session volume profile, and let's just talk about the lows and highs. So we have a low, a higher low, we have a high, and right now this is still a lower high, but if the next day is green, we would essentially have a higher high probably up in here if we have a nice follow-on candle, which would be pretty good confirmation of our uptrend, right? So you always want to pay attention to the slope of the market. Yeah, that's really it. Those are my thoughts on Bitcoin. I trade it like anything else. My macro thesis on crypto in general is I'm a hodler, Okay, so my portfolio is up pretty big. Like I said, I don't really trade crypto, right? I'll trade Bitcoin here and there. It is tradable 100%. I just don't invest my time trading there. So I'm not against it by any means. I want to make that clear. You guys have a habit here on YouTube of taking one idea and then just running it to the extreme and making up a whole fake reality based off of a comment. But yeah, I don't trade crypto simply because I don't want to. I trade index futures is where I make my money on both futures and options. It's totally fine trading crypto. I use the exact same principles there, okay? The one caveat, one of the reasons I'm hands off with crypto is that it's extremely volatile and speculative. And so the underlying supply and demand can shift very, very quickly. Well, what does that mean, Forrest? That means that even if you're looking at things like the volume profile, right, you can get a sudden huge demand shift by orders of magnitude. Say, for example, 20 or 30 hedge funds and buying up a coin without you anticipating that could put you in a losing position. And they might do that at any point in time, right? Same on the sell side, right? You could be looking at the chart and it's set up for nice continuation, downside, but then there's some regulatory change and things like that. So you have to understand kind of the narrative of crypto overall in the global sphere is that it's still pretty unregulated, right? And we should expect regulatory intervention in the crypto markets 100%, right? Regulations are going to keep changing as it gets more and more adopted and the world tries to figure out what to do with crypto. And those regulatory changes will affect prices by a lot, okay? I just want to make that a disclaimer. So normally you just look at the charts. It would be the same thing as if you're thinking about like, marijuana stocks and things like that, right? Obviously you can just look at the charts for what they are, but you have to understand that the macro environment, there are outside factors that would change the fundamentals of the thing that we're trading. So suffice to say, trading Bitcoin at all-time highs can be exciting, but it's certainly risky if you don't have a clear plan and understanding of what is happening. I hope you appreciated and enjoyed this video. Go ahead, hit the subscribe button if you're new here. If you're not new here and still aren't subscribed, that's crazy, but I'm so glad that you're back. Please do hit that subscribe button. Hit the notification bell. It helps me continue doing videos for this channel, sharing information on trading and all of that. Also, I just love and appreciate you guys. Have a good one. See you in the next video. Peace.